Welcome to Investors Insights. Our topic today is inflation and regulation. There's a word I haven't used too much, inflation. We've had vlogs that over the past couple of years talked about deflation, and the whole dynamics are starting to shift and change here. Bobby, when we went in this early morning meeting, you immediately said, hey, guys, last week interest rate increase. Right? You want to talk about that?
Yeah, you said it. We haven't talked about inflation because there hasn't been any. And so last week, the Fed raised rates, even though inflation was below their 2% target. So right now, real inflation is about 1.7%.
Right.
And so it's stubbornly low. Now, one thing we're looking at is the European inflation report coming out this morning. The reason we're looking at that is because if inflation is low there, the European Central Bank will keep rates low. That's important for you, the investor, because that makes the U.S. bonds more valuable. More people are buying U.S. bonds, which means rates are staying low for the U.S. bonds. And so that's making U.S. bonds.
Right. So, from the standpoint internationally, there are people that would prefer U.S. bonds over their own country, their bonds. So, huge positive there.
And then also with oil.
I want you to talk about that because a lot of times oil and inflation go hand in hand.
Yeah, and so oil has been low, so inflation has been low. But recently, oil is starting to pick up. And so just today over the weekend, Nigerian oil unions are striking. So oil is going up on that news. We have drilling rigs that are lowering. And so oil is starting to go up a little bit. And so that's important for you, the investor, because with risk assets, inflation doesn't affect the PE, but it's a PE ratio, which is a valuation metric, until inflation hits 4%. So we're at barely 2%. And so we're okay on that front. But we're watching oil.
Right.
We're watching oil carefully, because that could be the inflation driver going forward.
Sure, and these are things that can impact portfolios. So, and you have to navigate through that as the economics and the rates change. And then, Trey, you brought up about gross domestic product.
Yeah.
Talk a little bit about that
this kind
in terms of this economy and tax cuts.
That's right. So, and this kind of goes with inflation because the inflation is growth. Prices going up, people buying more. So next, based on the tax package that was released over the weekend, there's an estimated over $200 billion in stimulus to the GDP in 2018 alone. To put that in perspective, that's 1% of GDP. That's gross domestic product. That's everything we buy and sell kind of summed up into one big number. For the last few years, we've had about an average 2% GDP growth. So this is really a 50% increase on growth next year. That could cause inflation, but it's good inflation. You want growth. We want to see this. So this could be a very stimulative package coming out of next year. It's estimated to be the second largest in history, behind only the 1981 tax package. Wow. And so better than 2003, 86, back into the 60s. So it's going to be it could push inflation up, but the good way. You want people spending more and happy in growth.
Right. Yeah. And then Ashley, we've had a lot of people say, okay, this market has gone up just because of proposed tax cuts. Right. We have seen corporate earnings going up, looking very good this year, which has driven the markets. But in addition to that, there's another factor that you brought up in our meeting that may very well be the stimulus as to why this market has been so strong, and that tax cuts, should they come about, may be a whole nother category to help the market.
Absolutely. It's the regulatory climate. We told you on an earlier vlog, or pointed out to you if you remember, that for every dollar most companies make, 25 cents goes to compliance issues, regulatory issues. So we promised you we would come back to you later in the year and give you a little bit of a measure on that, tag on that. The president has cut $8.1 billion with a B, in costs from American business in regulation just this year. Yeah. That's this administration. Prior administration, $100 million in cost in regulation, added every 3 days. So it's a definite trend to lower that 25 cents on the cost line, get it lower. That will help that company. That will help their stock price go up.
Corporate earnings go up. So that is definitely a topic that we'll continue to watch very closely as well as we go towards the tax cuts. So on that note, we hope you'll continue to track us on Facebook, Twitter, and LinkedIn. We're going to continue having these dialogues. Here we are at year-end 2017, getting ready to go into 2018. Some exciting times, strong markets, and a lot of things going on, pieces of the puzzle to bring together. Yes. So we hope you found this very informative and you share it with others. Thanks again. Have a great week.